Welcome back to Counting the Costs, your weekly business stop on Al Jazeera. I'm Kamahl Santa Maria here in Dubai. I want to turn now to one of the nuances, if you like, of this particular financial crisis in Dubai, and that is the fledgling Islamic bond market. Put it in some sort of context. Dubai World is at the centre of this storm. It owns a property developer called Khamhl, and property prices in this city have fallen about 50% in the last year. So as you can imagine, lots of unfinished buildings, lots of for sale signs, lots of for rent signs going up across the city. But where did Khamhl get that money in the first place? Well, some of it came from Islamic bonds, and in particular, Khamhl is having trouble repaying one particular bond. They're called sukuks, for the record. This one is $3.5 billion worth. And that's really part of a wider story. According to estimates by HSBC Amanat, outstanding Islamic finance debt is worth about $822 billion. There have been some high-profile defaults as well. That includes the Saudi Arabian Saad Group, and also one called Investment Dar. It's a Kuwaiti Islamic invest fund and actually owns half of the British car company Aston Martin. So again, the potential impact here is very big, and there are even countries in Eastern Europe and Africa which have had to pull the sale of bonds. And those are important funds as well. Those are money they need for budgetary requirements there in those developing countries. But don't let the terms fool you either. We say Islamic bond, we say sukuk. This is an international business that goes well beyond the faith, if you like, as Nicole Johnston will now explain.
The world's old financial capitals are moving to a different beat. They're embracing a new type of banking, new in the West at least. Islamic or Sharia banking is becoming mainstream, and the bond or sukuk market is one of its fastest areas of growth. But has the Dubai debt crisis shaken faith in the global sukuk market, especially in Malaysia, where 60% of these bonds come from?
Dubai government's decision to restructure this Dubai World's debt is probably going to cause more damage to sukuks coming up from the Middle East and not so much on sukuk itself.
So how do Islamic bonds work? Under Islamic law, interest or riba is banned. Instead, the investors share the profits. Also, unlike conventional bonds, the sukuk has to be backed up by real physical assets.
Here, there is no toxic asset. These are real assets managed in a real economy. So I would any day say the Islamic sukuk is a safer bet, and clearly the mechanism will prove in the coming days this is the best option for the current climax.
Many people have been saying that Islamic bonds are safer than your conventional Western bonds. But now there's concern that Dubai may default on the world's biggest Islamic sukuk. This is a $3.5 billion bond. And if it does default, it's sure to send new waves of shock throughout the banking industry. This bond has been issued by Dubai's real estate company, Khamhl, and is set to mature on the 14th of December. There have been Islamic bond defaults before in Saudi Arabia and Kuwait, but if Dubai defaults, it would be the biggest. And it has almost as many investors from Europe as it does the Middle East. So where does the law stand when it comes to Islamic bonds? It's untested. Issues include who has the legal right to the assets in the case of default, is it the investors or other creditors, and which country has legal jurisdiction if it goes to the courts.
There is an absolute case for us to believe a long-term the shareholders or whoever invested in the bond market will get their money back. What's the facts? What's the fiction? That needs to be understood by the common investors. Otherwise, if it is driven by sentiments, you will have a downward trend.
When the global financial crisis hit, Islamic finance claimed it was safe because it was rooted in the real economy. But now that the Dubai crisis has hit, people are asking, is Dubai's real economy actually built on sand?
Now, during our time here in Dubai, we had the chance to have a bit of a chat with Nadeem Khan. He works at the law firm Herbert Smith, specialises in Islamic finance. He's worked on deals worth over $8 billion worth of Islamic bonds, so he really knows his sukuk.
If an investor is looking to invest in something which is Islamically compliant, it will seek to get comfort before he or she invests in that product as to the Islamic nature of it. Therefore, there will be an analysis which is done at the outset, which will involve Sharia scholars, it will involve Islamic bankers, other experts such as the lawyers and the accountants, analysing the structure of that product, and then that in itself will ultimately culminate in a fatwa being issued.
What's the feeling you've gotten in the last week or two since the Dubai World story broke, in particular Kamahl with its Sukuk, $3.5 billion Sukuk, which expires in mid-December? Has it got people worried that Islamic investments aren't as safe as they might have thought?
Well, clearly investors will be very interested, especially those who are looking to invest in Sharia-compliant products, will be very interested to see what happens over the forthcoming weeks with this particular scenario that we're dealing with. What that means in terms of future opportunities within Islamic finance, I think the products that are out there and have been used are within themselves fairly self-evident as to what they mean. It's a case of investors fully understanding what they are investing in and being clear on the rights that they have as investors in Islamic products and the obligations of the other parties to those instruments.
All right, let's wrap all this together with someone who lives and works here, Andrew Critchlow, who is the Middle East editor of Dow Jones Newswire. Thanks for coming up here. 42 stories above Dubai we are, and it's an amazing scene, but the story on the ground is just so different now. How's it been here, living and working here in this crisis?
The atmosphere here was pretty much like a morgue, certainly from the perspective of international investors, expatriates, Western expatriates working and living here. This was a real body blow. You know, they'd been told for the last 6 months that Dubai could meet all its obligations. There was no chance that it would default on its debt. In fact, the message from the government was that Dubai had weathered the financial crisis, was coming out of the storm, and that we could see some light at the end of the tunnel. Unfortunately, that hasn't proved to be the case. And so the announcement last week was a real body blow to confidence here in the Emirates, and I think that you know, we've already seen that internationally with some of the coverage, and also with the views of international investors now, many of whom were of the opinion that Dubai's debt was sovereign debt. It was guaranteed by Dubai government. If you invest in one of their government-owned companies, that ultimately the government and you know, in a quasi sense, the government of the United Arab Emirates would step in and honour those debts. That hasn't proved to be the case.
But then let's go back to that point you said about all the reassurances from the government. Did people really believe that? The world has been in an economic meltdown. There's been a slowdown here for sure. People are struggling to sell their properties, struggling to sell their investments, but people believed them?
Yes, people did believe what Dubai government was saying. And I think that was partly due to the track record of Dubai government. Since the boom began, some people argue back at the start of 2000, 10 years ago, you know, Dubai has proven that if it says something, it usually will deliver on it. And you know, we can see that from this wonderful balcony here. You've got the world's tallest skyscraper behind me, Sheikh Zayed Road, the Dubai Metro, these wonderful projects that they've announced and they've pushed through. I think that the problem is that investors' perceptions of what Dubai could actually achieve and what Dubai government's perceptions of what it could achieve actually became detached from reality. You know, ultimately, Dubai is built on real estate. Its economy was 30% dependent on real estate at the boom. You know, real estate for Dubai was its oil. And having an economy that's so weighted towards one particular sector, you know, should have sent really warning signs to investors, to banks, to financial institutions a few years ago. That didn't happen. People just piled in. It was an asset bubble. And now people are regretting that they've made those decisions.
In light of everything that's happened, do you think they will continue to come? Do you think that the people who are here will even stay?
For real estate investors, foreign real estate investors, people who would have looked to relocate here, buy property, settle down, find jobs, I think that is more challenging. And I think it's one of the key problems that Dubai has to face up to over the next 2 to 3 years is persuading these people that this is a safe destination to park your money, it's a safe place to invest, that you can trust Dubai, and that really is going to be an uphill struggle after what's happened. And I think the third part is to do with foreign investment from banks and companies setting up their headquarters here. This is something where Dubai has led in the past. I think this is going to make it much, much harder for Dubai to compete with other cities in the Gulf, cities like Doha, which is rising rapidly. Obviously, the Qatari government has a lot more wealth than Dubai. And even here in the UAE, neighbouring emirates like Abu Dhabi, which are backed by vast oil reserves, you know, they want very much a lot of the same diversification that Dubai has made its trademark now. So it faces a lot of competition within the GCC to attract this foreign direct investment inflows, and that's going to just become harder after what we've seen over the last week.
Andrew Critchlow from Dow Jones Newswire, thanks for coming up here, thanks for joining us. And that is just about it for our Dubai Financial Crisis special. Check us out online though if you get the chance, aljazeera.net/English. Hit the programs link, take you through to the Counting the Cost page. That's it from Counting the Cost. I'm Kamahl Santamaria from the whole team here in Dubai. Thanks for joining us. We'll see you next time.